Hey, what's up, everybody? So, really, what I want to do now is just kind of do a chart watching session. I don't really expect a lot of things to happen um, today, and it's really more for tomorrow. I might come back on live and do something tomorrow, but I really just wanted to kind of, see what's going on with the markets this week, and just kind of look at some charts. So it's going to be a crazy week, or short week, not a crazy week, but a shortened week because of the Thanksgiving holidays. So really, Thursday, Friday, I like all my trading will be done probably by the Wednesday. So I'm really looking for one good setup between now and then. Um, and so yeah, so I primarily will be looking at the Euro futures and um, the pound futures for this week. So if we jump to the daily, I'm gonna actually start off on Nasdaq though. I just kind of want to see what's going on. So basically, what I called out on Nasdaq is I wanted to see the market really invert these, and so looking at Nasdaq and looking at ES, um, I wanted to see the market really invert these, and we did. We pretty much gapped up past this fair value gap, and we're taking things higher. So I think we'll probably come out taking that high out very early. This could be a counter trend week on Nasdaq, on ES. So we'll see what happens there. But really, what I'm most excited about this week is going to be Nasdaq. I'm sorry, the Euro futures. So what do we get? Actually, coming to the daily time frame, um, we traded back up into this. We had a huge gap that opened up, and that's what this is. If you jump to that 15-minute time frame, that's that new week opening gap right here. And so again, we treat all gaps the same. We look at things just like a fair value gap, a regular gap, and we know that price will use these things algorithmically. And so if we jump back up to that daily time frame, that gap kind of catapulted us back to where we wanted to see the market turn around in this fair value gap. And so we're kind of sitting here. And so usually our Mondays are going to be the day where we don't really take a lot of positions. We could take a position today, but ideally, what I want to see heading into tomorrow, where we're going to have a lot of volatility, is us to respect this gap. I want to see the market close below this for the day, right? So whenever this day closes, I want to see us respect that fair value gap there. What would cause me to want to take a trade today, which is a little bit early, is I want to see the inversion of this gap here. If we do something like that, then I could probably see us trading. Jump it down to the 3-minute time frame. Yeah. If we invert that gap, I could see us taking things lower. So the biggest thing here is obviously being patient. Um, Turn this TV off. Turn this TV off. Turn this TV off. Turn this TV off. That Kendrick Lamar album has been stuck in my head all weekend. Mm-mm. So if I only had one trading step. So really, it's just kind of being patient, right? Um, mm-mm. So when we think about power of three on a weekly basis, um, ideally what we want to see is the market make the high of the week somewhere between Monday, Tuesday, and Wednesday. And then the rest of the week is going to be spent trading away from that high or low, right? So in this, whatever your bias is for that week. Um, and so ideally, whenever I come into the markets, especially on a Monday, I'm looking, obviously I have my bias drawn out ahead of time, right? But I want to see what the market's going to do. And I'm looking for it to make the high of the week in those first couple of days. In this case, I'm bearish, so I want to see the market make the high and trade away for that high, right? And so I'm always thinking of power of three on a daily and a weekly cycle, right? So we jump up to the weekly, right? So again, we know that this candle, we want this to be bearish, right? We want to see this candle, price to continue to go lower. And so we know that it doesn't matter if it's a minute candle, an hourly candle, right? We know power of three basically comes in, it sets an initial range, right? You could think this is consolidation. It forms a high, forms a low, then it trades back into the range, right? Where usually the high and the low are going to be wicks, right? You look at any candle, it doesn't matter if it's a weekly time frame, right? Like this. Usually they have wicks to the top, wicks to the bottom. The wicks could be even very small like this, right? You see that candle has a very small wick on it, but usually most candles do that, right? So minute time frame, same thing, right? This is the minute time frame. It's literally the same idea. Each candle creates a opening range, a high, a low if it's bearish, or it creates an opening range, goes low, then goes high if it's bullish, right? So all candles work like this because all candles are getting liquidity. And so, or the purpose of price moving is always moving to and from liquidity. It doesn't matter what time frame it is, weekly liquidity, 1 minute liquidity, etc. So if I'm bearish for the week, I want to see the high formed somewhere between, in the best case scenario, Wednesday, at the end of the day on Wednesday, I want to see the high of the week formed. So I'm consistently looking for where the market could run to kind of give us that high of the week. And we'll talk about bias again over the next couple of weeks, in that free mentorship. But but just for today's, I guess, ideally I want to see the high of the week made. And I think this fair value gap right here, this red one, which again is that daily SIBI, again, jumping back up time frames, it's this right here. I think that this could potentially be our fair value gap. So I really need to see signs of bearishness before we can do that. And so taking out this old order block like this, inverting this fair value gap might cause me to jump in the trade earlier this week. So yeah, this is kind of what we want to see. So I'm actually going to pause my screen here and log into my account. Tony, it's all good, man. It's all good. I feel like you are consistently on here. But I mean, I'm not really making these lives. I mean, if people hop on live, I think that's the best thing because you can watch in real time. But I'm really making these lives so people can check them out in their own time. So I feel like most people don't watch them when they're supposed to be watched anyway. So let me stop my screen really quickly. I want to log into my trading account. Can't give you all that info or I'll be broke. Actually, so I'm going to log into the trading account that I've been working on, or the AMP Futures account. So let's do that. So this is And again, I want to make sure that you guys see the account, because I want to be as authentic as possible. And since challenge accounts are pretty much paper accounts, I can show these and take trades in these without, any legal stuff getting in the way. So what do I want to see here, right? So I talk about this all the time, right? So this red line or this red box is going to represent, again, that daily fair value gap. And ideally, I want to see the market respect this, right? But I need to see kind of more signs of bearishness on the intraday level, or like in this day. And so if we're in a bull market, or we're looking for buy side liquidity, right, we're going to make higher highs, obviously higher lows, right? So if we're going to be bullish, then we should be respecting old fair value gaps. We should be respecting old order blocks, right? And we haven't gotten that, right? We've taken out this order block here. Again, that black box or that black candle is going to be our order block. We also are trading into this fair value gap. So what I want to see here, I want to see, since this is a BISI, right? This is a BISI, right? In a normal situation, this would be green. Right? If we were drawing this out, it would be green. But I want to see this invert, meaning that I want to see this disrespected, right? If we're starting to line up with the overall bigger time frames, we're going to start to want to look for sell side liquidity, right? We traded back to our level that we think the market could potentially run to for the day, or for the high of the week, which would be this fair value gap here. And we want to see this kind of start to fall over. Well, what's the first thing that's going to happen? We're going to start to break structure, right? We're going to start to break structure. We're also going to start to disrespect bullish liquidity markers, right? And this BISI is normally a bullish liquidity marker, right? We would normally want to buy this in here. But because the higher time frame bias is telling us that we want to be bearish, we want to see these disrespected on these lower time frames. So if we invert this, right, meaning that it's disrespected, it's going to be a key sign to me that the market wants to continue to look and go lower. And it lines up with the bigger picture too. But I'm not really in a hurry to try and buy this, because it could just take off and do this, right? We don't really have a clean break of structure. There's not really a break of structure here, at least in this time frame, 30-minute time frame. This looks very much like a buy, right? So ideally, you need to start to see breaks of structure. You need to start to see inversions before and obviously the rest of our setup, right, which is the break of structure, fair value gap, opening up, that type of thing. I do like the fact that this is staying below consequent encroachment. It's trying to retest this level here, and it's failing. So to be safe, this is what I want to see happen. I'm gonna make this orange just because. So I do that. This is what I want to see happen. I want to see this, right? And then maybe I'll push the button. But if this just takes off like this, right? I'm going to turn this on. So these are macro times. You might see these. Again, this is not going to be, this is kind of a baby introduction to this. But there's a lot of concepts that I use when I pull stuff together, but it's basically the same 5 or 6 things overlaid on top of each other. Power of 3, liquidity markers, market structure. And then everything else is really just time of day and situational, right? Draws and liquidity. What time are we at? And so the reason I do love the currencies, especially the second session currencies, so much is that power of 3 really plays a part, and the time and price theory, which is certain things will happen during certain times and hours. And so obviously we talk about trading windows, right? So 7 to 10 is usually where we're going to see most of the action. But inside those times, we have macro times, which are essentially a macro is essentially if you think about a computer program, if you're a computer programmer, I'm not, but if you're a computer program, you know what macros are. They're essentially instructions on price to do certain things at certain elements at certain times. And so a macro is basically just an instruction. And so these macro times, Time windows are usually when you're going to see the volatility play out, right? It's going to be an expansion macro. Usually 950 to 1010 is what's called an expansion macro. And that means that price is really going to start running, right? So a lot of the times you're going to see the market do things because all this stuff is a big computer program. It's algorithmically driven. It has nothing to do with the traders that are buying and selling. It's a big computer game. So when you look at that from that perspective, um, um, if it's a computer program, it has certain rules, it's going to do the same things over and over again during the certain times. And that's kind of why, again, I like currencies. I like currency for currency trading. I think it's the easier market to trade than NASDAQ, right? And let's not get it twisted. I can trade whatever. But I think for the person that's coming on and they're new, I think this is the easier market. One, because price is very direct. It does not whipsaw around. It usually moves to and from. And if it's the areas that you want to see it happen very quickly, right? One, it's a small trading window. All of your trading usually will get knocked out and be done by 11 o'clock noon, right? There's not a lot of whipsawing in price, right? And I think that's the most important thing. A lot of times when you trade NASDAQ can overwhelm you if you've ever traded it because there's a lot going on. And sometimes you'll have the direction right, sometimes you'll have the bias right, but the whipsawing in price will give you a crazy amount of anxiety. Forex doesn't usually whipsaw like that. It usually moves straight to the price that you want to see it. It's just not as much, right? But to be honest, if I was trading, me personally, I would rather have less volatility and more preciseness over where I think price is going to go and how quickly than, volatility. Because sometimes volatility can intimidate you. Sometimes you can take more losses. Sometimes you can take bigger losses than you expect, you know. And the idea of price whipsawing around is it can play a lot. It can play headaches, play tricks on you, and it can give you basically a huge headache when you're trading. So is the reward there? Yeah, 100%. I know, like, obviously you guys have seen what I've been able to do with NASDAQ, right? Primarily the majority of my funded accounts, that 1.7 million in funding came from NASDAQ, right? Um, I would say most of the challenges that I've taken in the accounts that I've done in the future side have been with NASDAQ. I would say, but at the same time, you've also been able to see like the building of that 10K account to 30 or 40K, 40K. Um, and that primarily happened with just currency futures. And I think that was an easier route for me and honestly an easier route for most traders. So, coach, your time is important. Greatly appreciate it. I appreciate it, man. I appreciate it. Hopefully you guys are getting as much out of this as possible. Hopefully you guys are learning a lot and you're looking at price differently. I think that's the biggest thing. When I started learning these concepts, I came from a traditional retail background too, just like I would trade like support and resistance and your basic market structure and supply and demand and that type of thing. Engulfing candlestick, like all that stuff, right? And I would have like 50 different chart patterns. I'm like, oh, that's a reverse doji with the morning star pattern, with the Dragon Ball, whatever, like what, you know what I mean? Like I'd have like all these different chart patterns and try to memorize them. And like, okay, I see the pattern. It's time to go. And it's not really like the market doesn't care about your chart patterns. You got to think about what these patterns represent. Even with the setup that I give you guys now, like the market doesn't care about a break in structure or it doesn't care about a fair value gap. It cares about like the narrative, right? And if you can't put a narrative to price, like if you don't know why price should be moving this way, other than the fact that it's a higher high, higher low, higher high, higher high, you're always going to get swept up and you're always going to lose money because you don't really have a story to yourself. And stories kind of give you confidence, right? And so if you know why price is moving down here, up here, then you are going to be a lot better off. You're going to be a better trader because you can't risk $100, $200, $500, $1,000 consistently and not be sure what you're doing. And this next year in 2025, y'all are going to see me really turn up things a lot. I think this past year was really just, I wanted to be as relatable as possible and kind of show you guys what's possible, right? Taking a $10,000 account. I could have started the account with, a little bit more than that, but I wanted to, again, show you guys what the average person might have saved up, right? 5-10 grand, right? And how you grow an account. And even with that, I mean, you're able to see like what you can do with that in 3 months, right? I mean, basically that account, I mean, obviously I can't promise your results like the same stuff that I saw, but I mean, 3 months, $30,000, right? Or 20 or 30,000, something like that, right? I mean, that's 6 figures a year off of just $10,000, right? And I'm not saying again that you guys can copy that. I got 10 years of experience in the market. I've been through a shit ton of L's, but I mean, showing you guys what's possible, what you got, and that's not even counting the funded stuff, right? That's not counting what you can do with a funded account. That's not counting what you can do with, the other things. So like, there's this game. If you understand this game, and if you can even just shoot 50% from the field, if you can just make half of your trades, right? Coin flip, and you manage your risk appropriately, you guys can do some damage in this world. If you're capable, there's the potential to do a lot of damage, right? 50% win rate. If you can consistently be 50%, you can do a lot of damage. For even 40%, you can still be very profitable and do a lot of things, especially if you're managing your stop rate. So what do we have here? We have a break-in structure technically on this 15-minute time frame. I'm going to be very conservative. I want to see price trade under this gap. I want to see it come back down here. But ideally, if I was trading a 5-minute time frame, this is what I would be looking at. There's a volume imbalance right here. It's very, very small. It's very small. Like you can barely see it, but that gap between these two candles means it's the volume imbalance. And since price, like a volume imbalance is usually like the weakest of liquidity markers. It's like usually a fair value gap and old high will be the strongest ones. A regular gap like this, a volume imbalance, a new week opening gap, those will usually be like the weakest ones. A wick, right? So if price is really reacting off of this, it's letting you know it's very bearish for this session. So I want to see kind of how these candles close in relation to that. But again, since this is a daily fair value gap, this red box, again, jumping back up to that daily, I want to see the market respect this and really start to turn over. I mean, best case scenario, we close way below this gap, which will be way under consequent encroachment of that daily. And, it gives us an opportunity for this white candle to maybe even close underneath the gap. If it entirely respects it, it's beautiful. I don't think we'll come back up here, at least today, right? Part of trading is being able to manage kind of the bias on multiple time frames, right? And knowing that the higher time frame stuff is always going to play out, no matter what the lower time frame stuff says. So going into tomorrow, if we respect this, let me clean this up. If we respect this gap, then there is a chance. There's a chance that we could come back up here, maybe Tuesday's daily candle, and kind of sweep this high and then go back under. So if you notice, a lot of times the fair value gap doesn't always just go down off of the first touch. Sometimes it takes multiple swipes at this before it goes down. And a lot of times you'll see like the price will set a high either inside the gap or just, around that high. And then it'll respect this, but then it'll come up one more time into that gap and sweep that high and still respect it and then close below it, right? So I'm kind of balancing what I'm seeing on this higher time frame on the daily with what I'm seeing on the lower time frame. But so that's why I wouldn't be trying to swing this, even if this ends up being the high of the week right here. In theory, you could swing trade this, right, and hold it to like whatever target you need to hold it to. You know, I think my target for the week is this low, right? So it's like a 200-point drop, but you could always come out tomorrow, especially when the market starts to transition. You know, that kind of weekly reversal, which today it looks like it could potentially be. The market always again can come up on Tuesday, you know, and do something like that, sweep that high one more time, respect everything that still needs to be respected, and then continue to drop. So usually with these like weekly reversals, I don't try and uh, hold them overnight. I don't really hold my trades at all overnight, but I definitely wouldn't hold them tonight because just as easily as the market respects this, again, one more time, it could come up here, and we know what sits over this high is going to be buy side. So come up here, grab the buy side one more time, and then just start tanking. I do eventually think we'll come back down here to this weekly opening gap. That's that volume imbalance where the market opened up to. So we'll see what happens. It could this could happen today, but it's whatever. There's no real news between now. I mean, it's 10 o'clock right now. We're in that 1050, that 950 to 1010 macro, right? You can see this. The times are a little bit off because of the time change that happened a couple weeks ago. But this macro, it should say 950 to 1010, but you'll by 1010 you'll probably have seen this really start to go. But again, I don't really want to buy anything until we invert this big orange box. So the minute we get it closed, we got about a minute left. There you go. Just like that. You gotta love when stuff plays out exactly how you call it. You kind of look like a genius on live, right? So I want to see this close and invert this, and when it does, I'll buy. Or I'm sorry, I'll sell. So I just need this. We got about a minute 30 left in this candle. The reason you want to wait for candle closes is because there's no guarantee. This could just wick. And how sick would you be if this was a huge wick and you were caught at the bottom? And I know that's happened to people before. I guarantee you, if you watch this stuff, you probably have been caught in something similar to that. So I'll sell this as soon as we get an inversion. You could have sold earlier. Honestly, this was your breaker right here. You could have sold that, but I just wanted a little bit more confirmation since we're dealing with daily time frame levels. So I got about 20 seconds left. And this is, just trading. This is just trading advice. This is not financial advice. This is educational advice only. I'm sorry. I got to say that right every time because this is not a signal providing service. You guys are just watching me do what I do. So boom, that was it right there. I'm going to go ahead and sell. Actually, since this is my whatchamacallit account, I'm going to probably put 2 in. Stop loss, take profit, bam. I'll do that. And then my take profit will be, see what it looks like down here. The low of the day is here. So if you guys had a lesson for today, it would be literally looking at the market to see like how it uses the macro times. Oh, what happened? Why does it only show? Oh, am I shoot? I longed this. I should have shorted this. What happened? Shoot, it's my bad. Let me click that out. That was my fault. I was like, what's going on? Damn it. See, and this is why you got to protect yourself against dumb stuff because everybody will do dumb stuff every now and then. I can't believe I just did that. Yeah, I'm like, what the heck? Like, why am I losing money? I don't think it was $60. Actually, it was more than that. It was about $100. No, it's about $60. Whatever. So I want to do it. So a couple things here that I'd like, stuff I don't like is we inverted this big gap. We've also obviously broken structure stuff too. I'd like us to stay below this gap here. Right, that green gap. Ideally, I want us to stay below that. So I have 3 contracts on here. I probably will scale into 5 if everything holds. Let me hop down to this 5-minute time frame and see what's going on in 3 minutes. Oh, that's great. So this goes back to what we talked about last night, right? Managing the trade. So what's my thought process here? We could trade back up into this gap. I wouldn't even be alarmed if we did. But ideally, I want to see price stay below this gap. Right? We can trade back into it. That's perfectly fine. Like something like that. Yeah. The clutchest entry would have been right here. I think as a trader, I've always been like my ability to read entries is probably like my one good skill. Like my entries are always like easy to see. But in this case, like I probably would have been okay entering off of this volume imbalance, especially if you jump to that 5-minute time frame, or what was it, that 15-minute? Oh, it was that 5. Yeah. When price kind of broke this and then retested that breaker, it's called a bearish breaker, that we probably would have been okay there. But let me hop down to this 3-minute. So ideally I want to see price come back into that. So we're going to be negative for a second. Again, this is a challenge account. So it's like if you blow this, and it's like it is what it is, right? It's not a huge deal. But I don't think we're going to go. You could. I mean, we definitely could. But 30 minutes, maybe. But with this being that daily fair value gap, like we easily could come back up and retest it, but I don't think we'll come all the way back up here. So my stop is going to go right on top of that inversion fair value gap. I think if we come all the way back up here, then we're probably going to keep going up. But yeah, no, I love the futures market. I love currency futures specifically because stuff just moves. There's such a less of a headache. Like if I were to go to the what is this? The NASDAQ. Let me hop on here. It's NASDAQ. That's not NASDAQ. Sometimes it ranges so much. This is a good trade. This would have been an amazing. It's 1013. It's 950 macro. This would have been a great bearish setup right there. You would have already taken out 70 points in the market. So that's not bad at all. But a lot of times, man, NASDAQ can whip you around. It can whip you around. And I think for my heart and my head and my heart and my account, not really my account, but just more my heart, man. Since I was starting to get, like, stuff would play out, but it's like, geez, like it's like how many times we gotta go through this whipsaw to get where we need to go. But there we go. 6J. I'm trying to get back to euro. There we go. So about 300 down right now. So probably a little bit more than I probably wanted to risk. So I probably should have risked about 2 contracts instead of 3. But see what we're doing. Trading back into this. So this right here is the 3-minute fair value gap. This right here is the 5-minute fair value gap. If I scoot that up a little bit. And then obviously the upper end of this gap here is the bottom of this inversion gap. So it's okay if price gets this. My stop is going to be all the way up here. I figure if we take out this order block up here, we probably are going to be bearish. But I think well, somewhere in between where we're at right now and this high will kind of tank and fall over. It's very early. We got about 2 hours till noon. So I'm just kind of chilling. If I take a loss, take a loss. I don't really care. I'm usually way more aggressive with these challenges than I am my own personal account. Anyway, So we'll see what happens. I'll leave this up. But the biggest thing to trading is just being very patient. You know, I could have probably waited, but yeah, I could have probably waited, but until we got up there to buy or to sell, I think I probably got a little happy. It's okay though. If I wasn't in drawdown, I probably would stack another entry in this box. Like if I only was like maybe one contract down or two contracts, I probably should have waited till we rejected before I topped in this secondary, or at least the third contract. But you know, if you're a perfectionist, sometimes it's really hard to trade. And I'm sometimes like when I get really passionate about things, I get real technical. Yeah. So let me go with these comments. So exactly, meeting you was life changing. I look at things completely different. That's the goal, man. Hopefully you're looking at things a lot differently than you were before. And you're really starting to see like the precision that the market has. Yeah. If I had to do this again, I probably would have only put in two contracts. Getting a little bit too high for where I wanted to be. And I think I just miscalculated when I was putting them in. So we'll see how this plays out, but I'm not really pressed either way. Good sign that we're staying below consequent encroachment. This is that 5-minute fair value gap. Right there. We're just shy. Oops. We just tapped consequent encroachment. So there's a lot of overlapping stuff here. This is the daily fair value gap. This is that inverted 15-minute gap right there from that low to that high. And then this is now that 3-minute gap that's right there. So we'll see what happens. This inverts, it's probably going to be an L. But we'll see. And then ideally, if you have the best case scenario, you have like a monitor where you can watch multiple screens at the same time. But a lot of people obviously can't do that or trade on their phones or whatnot. And, it's like kind of whatever you can afford. But yeah, so see what happens here. But ideally, I want to see this continue and break. So we'll see what happens. Per this account, knowing that I have a $2,000 drawdown limit, I probably would have only risked one contract for this if I was not being aggressive. So see what happens. But I also am trying to pass these challenges like pretty quickly, and the $50 that it costs doesn't really hurt me as much. But two, three drives. Also, too, one thing you want to notice when you're looking at candles is, again, even these 5-minute candles, again, when we talk about Power 3, right, it usually is going to be the same thing on any candle on any time frame. So when a candle comes out of the gate, and it just starts working the highs. Like this is the 5 minute candle, and we are about a minute into the candle. See how this candle just automatically came out and started working these highs in the first minute? So if we're thinking about this in terms of power of three, what is it doing? It's working the top side to get buy side. So like in this gap, right? It's probably buy side liquidity in here. So if you kind of want to know how a candle's gonna form throughout the entirety of it, watch it for like the first half of its time period and then see where is it working, right? Because the way that my mind works when I look at these charts is everything is a money grab. It's constantly, every chart, every time frame is constantly grabbing money. Every candle is running to liquidity at some point. It might be the bigger time frame liquidity that you see here. It might be 1 minute liquidity like that you see on this time frame. It could be 30-second liquidity that you're seeing, or 15-second liquidity, right? This is the 15-second time frame and 30-second time frame. And it's always consistently running to liquidity. So you got to ask yourself, if the candle's spending half, the first, if it's a 1 minute candle and spending the first 10 seconds up above, like what is it running towards? Where is it running to? To get its liquidity, and then it should just distribute through that, through that last half. So I don't like this right now for a couple of reasons. If this was my personal account, I probably would have scaled out of one position. Like I probably would have got out of one, because I just don't like how much I'm in drawdown per what my account will let me hold. And you kind of have to ask yourself, like, yeah, it could take me out. But could take me out. But you have to ask yourself here, I'm gonna do that. You have to ask yourself, I lost my train of thought. You gotta ask yourself a question though. So what's going on right now? We're trading back into that daily SIBI, or that daily fair value gap here. Again, we're inverting. This is that inversion of this gap here that we totally didn't respect. So we'll see what happens. I mean, again, there's a world where we could come back up here and just sweep this. And if that's the case, then I don't really want to be part of that. Like that. Or we could just keep going. But I think kind of the breakdown, this is what I wanted to see. I'm going to put that back up there. I think I like starting out Mondays with an L. So see how this candle closes. Close that like that. We got 3 minutes. Trade it back up into this gap. I really want to see how this candle closes. Mm, mm, mm. It'll probably stop me out here. So I think the maximum drawdown I could take for a day is 1,000. There it goes. So we'll see what happens for the rest of this day. And then we will come back tomorrow. So I'm still very much bearish on this though. I think I like starting off my Mondays with L's with you guys. So if once you take a loss, right? So what you want to do is you kind of want to take a step back from the market, evaluate and see if what you're looking for is going to continue to hold. And looking at your overall idea. So I want to see the market really kind of close below this before we really just start to really look for bearish opportunities again. So pause this. I'll be right back. And going back to this point that Tony had a second ago, I honestly wouldn't even really deal with Nasdaq right now. If this is your first time learning these concepts, trade Forex, because you're not going to know what you're doing yet. So that's just me, just my thoughts. Let's see what's going on here. Yeah, this looks like it's going to invert. So, oh well. If this trading thing doesn't work out, then I'm gonna start one of those YouTube channels where I just sit around and eat food all day.